statement we bring confusion in the account. So the first side is, let's write the first side, we have sales under trading profit and loss account, and we get it from the debtors control account, which is 18,120. Now let's start from the number. Don't forget, you're familiar with the trading and profit loss format. You have opening stock, and I think you've seen that in the question. January 1st, the closing balance sheet, you derive that from that. So that is 1,000. Then add purchases, you get it from your creditor, that is 12,530. So you add together, you have 13,530. So then you less your closing stocks. Don't forget the closing balance sheet, the closing stocks, which is the one we are given. So then after that, you write a closing stock is a 1,500, opening stock is a 1,000, not 1, is 1,000. So our closing stock is 1,500. When you add it, you have a 12,030. And that is the cost of goods sold. So gross profit, we have gross profit, which is a 6,090, because the total of sales, you let's find the difference of sales and cost of goods, you arrive at your profit at the end of the day. So that is the 18,120. Balance it off. Then go ahead and prepare your profit and loss. You bring the gross profit forward. You bring it forward here. You have a gross profit 6,090. Do you have any other discount? You don't have. You don't have anything that relates to income. So now we prepare our expenses. Don't forget, we have the additional information, and the first additional information you have is rent. You know, I gave you hint on non-profit organization, on how techniques, on how to balance your account when you are given owing, when you are given two statements of account, statement of balance sheet, where we have the opening balance sheet and closing balance sheet. I taught you some techniques, and the techniques is when you are given opening balance sheet, and the closing. Owing, you less, you had. Prepaid or advance, you add and you less. So the same thing applies here. And let's go to the question. Let's go to our card book. We have a rent, and what is our rent? Our rent is a sum 50. We have rent of sum 50. Now let's look at the question. We have the rent owing. Opening owing is you less it. That is a minus 75. Then you have the closing, which is 65. So the rent for that year is 740. So we also have electricity. You have electricity. You don't have any, because you all the information in the card book, you need those information to help in prepare your account. Now, having done that, then you prepare what we call. Now, before that, electricity, there is no adjustment in electricity, so that is the 300. Then telephone. In telephone, we have prepaid. Telephone, we have, but the ones in the card book is 6,000. And don't forget, prepaid, opening prepaid, we have 55. So you had 55. Then closing prepaid, we have you less it, which is 85. So at the end of the day, the telephone you have is if a telephone that was incurred during that year is 120. Then we have repairs. Repairs has no adjustment, so that is 70. Then don't forget we have a depreciation. We have a depreciation. And then why do we have depreciation? Looking at the question, you see in additional information that January, let's do that of equipment, depreciation on equipment. Let's look at the January 1st on your additional information. You see 6,000 naira for January 1st. Then the closing the balance sheet under equipment, we have 580. That means there is a depreciation of 200. You are not giving the additional information, but you look at the difference that something has changed between January and 31st. So that is 6,000 minus 580, which is the current value of that asset. So you have your 2,200 naira. Then there is no depreciation in furniture. The same five, it still remains the same 5,100 in December, which also appear in the balance sheet. You see that 5,001 is in January and is also in, so there is no depreciation in the furniture. So having done that, you add it together, you have 6090. So to get your net profit, you find the difference. If this expense is greater than gross profit, then you have net loss. But gross profit is greater than this, that means you have a net profit. Net profit of 4,660. So that is that. Then we will now prepare balance sheet at that date. Balance sheet. Don't forget the information in the additional information will also appear in the balance sheet. Very important. So we have a fixed asset here. We have a furniture. Furniture is 5,100, and equipment. The depreciation has been adjusted, and you can see that the value, the net book value of equipment is 5,800. So we have a current asset here, and the current asset we have a closing stock, and that is 1,500. We have debtors. There is no adjustment. There is no adjustment for debtor. There is no bad debt. There is no bad debt. There is no provision for bad debt. Then cash in hand. Cash in hand is 6,530. This is how we arrive at our cash in hand. You know, let's look at the information. The following is summary of bank account of salary.